Hi, it's John Zolaitis. I'm the president and founder of Quovatus Capital. We're a registered investment advisor in the state of New York. The presentation that I gave at Columbia Business School Securities Analysis course on idea generation from an investment perspective and also time allocation. The genesis for this talk was a discussion I was having with a friend around a blown up retail stock that was trading around $3 a share. And as we were discussing the company and its prospects, I raised the question of what were we potentially going to get out of this business and out of this discussion? It was never going to become a great stock. So I felt, hey, let's go through what does it take to find a great stock. First off, I'm going to define what I mean by great. And for the purposes of this presentation, we're only going to talk about long ideas, but there are also great short ideas. And a great short is a stock that loses 50% more or more of its value. And a great long is an idea that provides above market returns over an extended period of time. Now, you might come up with a different definition of great, but I don't think that's going to change the conclusions that we reach later in this presentation. And you might ask yourself, like, why bother? I could be really happy getting a 7% return if it had a high probability of success. I would just cite this quote from Charlie Munger talking about the performance of Berkshire Hathaway being highly leveraged to a small number of ideas that significantly outperformed. And there's two things to note here. One, those ideas are responsible for the outperformance of the business. And second, duration is a feature of their performance. A second way to think about issues with smaller returns, i.e. sub-great returns, is that frequently that they require just as much work as what would be required to find a great idea. And obviously, it's not leveraged over the long term. You have to continue to do that to find more and more ideas of this nature. And second, it's very tax inefficient. So if you're buying and selling stocks with small gains, you're giving away a lot to the government relative to owning the same name for a very long period of time. Regardless, there's just not that many great ideas out there. It's not easy to find these kind of ideas. It requires a lot of work. So in order to think about what amount of work it requires to find a great idea, I first put together an outline of the process that we use to analyze stocks. I'm not going to go through all of these items below, which you can read, and I'm sure you have your own process. But the bottom line is it requires a lot of research, a lot of time, and a lot of effort to fully analyze a business. And if we try to quantify the time, I think this is where we start to realize how rare and how difficult finding great ideas is. First of all, I think most people can only concentrate deeply a few hours a day. And for my part, before I can think in an interesting way about a company and find something that the market might be missing, I have to have actually already done the background work and have a lot of the information before I start really cognating on the idea. And then third, for me, for my process, I need to have a financial model to try to figure out what the future earnings and cash flow of the business might be. You might be able to do this with back of the envelope type thing, but for me, if I'm going to have high conviction, I need to do these three steps to really get into the business and understand why I want to own it. And when I kind of add it all up, I estimate it takes me about 3 weeks of work. And when I say 3 weeks, I mean if I'm working from 8 in the morning till 5 at night every day, or about 120 hours of work to fully analyze a company. And if we go back to the idea that you only have 3 hours a day when you can really concentrate, or you can work kind of independently, that means you need 40 days to accumulate, or 8 weeks to accumulate this amount of time. If you take 4 weeks of vacation per year, that gives you 6 chunks where you could analyze companies. But the reality is you aren't really going to get 6 at-bats, because at some point in a lot of the analysis you do, you're going to reject the ideas. And then secondly, even after you do all the work, and fully analyze a company and come to the conclusion that's a great business, the stock could be overvalued or fairly valued and thus not particularly attractive. So my conclusion is, as a professional investor, you're going to get perhaps 3 ideas per year that could potentially be great ideas. So that's just not very many. And so what the implications of that are pretty important in terms of how you should allocate your time. And so I've put 4 conclusions here. You need to be much more selective earlier in the process about where you allocate your time and your resources. If you only get 3 at-bats, if we can eliminate some of the bad ideas early and get 4, that's a significant improvement in terms of your potential for finding great ideas. Second, I think you should really focus on investment fit and staying within your circle of competence. It wouldn't do me any good to kind of gallivant off and start analyzing businesses outside of my areas of expertise. My chance of being right would be much lower and it would probably be a colossal waste of time. Third, and this is the last 2 are for me, sunk time does not mean that you should continue deploying additional resources. So I have on my screen a lot of businesses that I followed for years and years. I probably will never buy them again, but because I tangled with them in the past, I just can't let go. I should really just delete those off my screen. And then lastly, controversy, in my experience, has not been a great source of ideas. If you've got a lot of people lined up on both sides of a particular name, the idea that there's an opportunity there is probably lower. If I want to take the other side, what are the sources of great ideas? Like, where can you look that might be more productive? This isn't meant to be exhaustive, but first one, stock sell-offs during market panics and crises. That might sound obvious, but there are 2 problems with this particular area. One, it happens infrequently, maybe once every 7 years. And secondly, everything tends to sell off at exactly the same time. So it becomes very difficult to focus and figure out which names you want to buy. In fact, you probably need to know which names you want to buy prior to these sell-offs. Second category where we spend more of our time are fallen growth angels. So these are companies that have been great performers, kind of proven businesses that some catastrophic or semi-catastrophic event occurs, causes the stock to be much lower. The 2 problems that you'll run into here are, 1, you need to understand whatever it was that caused the stock to sell off. And 2, it becomes a judgment call on whether the idea has changed and the growth opportunity that what people thought was there in the past was false, or whether this is really truly an opportunity. And the third category are misunderstood or ignored stocks. And this can include smaller capitalization companies. Here, you're going to get names that trade at low valuations on traditional metrics, but you need to figure out, why this business can grow or why the market might change its view on the stock some point in the future. My question to you is, how did you find your best idea ever? And do you have a process that you can use to find other ideas usually using the same approach? If so, I'd love to hear about it if you want to put that in the comments. Also, really happy to hear any reaction that you have to this talk. It's meant to be kind of provocative and make you think about how you are allocating your time and perhaps get you to change some of your process. In any case, thanks for watching. Cheers.